Hi guys, welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Thursday morning and a pretty bleak picture across global markets, given the fact that we saw a sharp sell-off on Wall Street overnight, and this morning weak sentiment rubbing off on Asian markets as well. So GIFT Nifty hinting at a start even below that 19,600 mark. And of course, we'll be watching out for a lot of result reactions, including the likes of Bajaj Auto, Wipro, IndusInd Bank, and lots of numbers, slated to come out today as well. So we will be talking about expectations, and of course, we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, as usual, send them in to us with the hashtag, MC, ask MC rather, and we will have them addressed. But before we go any further, let's take a look at the top for today. Joining me is Rohan Shah, who's a technical analyst at Religare Broking. Good morning, Rohan. Great to have you on the show. Yesterday, we saw a fair bit of a sell-off coming in after, given the fact that a day prior to that, we had reclaimed 19,800. Would you say that yesterday's sell-off came as a surprise? And given the fact that GIFT Nifty is hinting at a start below that 19,600 level, what are the key support levels that you'll be watching out for today?
Yeah, very good morning, and thank you for having me on the show. Indicating that SGX Nifty is trading below 19,600, but still we maintain our positive stance. Still, Nifty is trading above 19,500. In fact, we believe 19,530 to 19,550 is a level where one could create a fresh long position in the index, as there is a risk-reward favorability, maintaining the stop below 19,480. So technically, if you look at the index has been trading in a 300 to 350 points, that is 19,800 to 19,850 on the higher side, and on the downside 19,500 to 19,550 on the lower side. But the positive thing to note over here is that the consolidation what we are seeing is trading above 50 days exponential moving average, and in the past this average has been worked very well. This 50 days exponential moving average has provided a support historically. So we believe this time too we can see buying interest emerging from 19,500 levels. So yes, any long position can continue to hold till Nifty is not trading below 19,500 levels.
And what about the bank Nifty? Of course, we saw this index also come under a fair bit of pressure yesterday, down 1.5%. In fact, below that 43,900 level as well. Anytime soon that we can retest 44,000 levels on this index?
Yes, definitely. If you look at the daily chart of the Bank Nifty has been trading in a range bound scenario, and currently is trading around the lower end of the range, that is 43,600 to 43,700. So we believe till the time 43,600 is not taken out, we must continue to, we can see the higher level coming up around towards 44,400 to 44,600, provided 43,600 is held.
All right, that's the view on the Nifty Bank as well. Hold that thought. With that, let's go back to, Rohan and talk about specific stocks now. Rohan, IndusInd Bank reported its numbers yesterday, and, numbers were pretty good. Profit and NII both beat estimates. Asset quality at its best in 11 quarters. This morning we have brokerage views coming in. Most of them are fairly positive on the stock. However, we have Morgan Stanley that has cut the target price from 1,800 rupees to 1,775 or thereabouts. Higher operating expenses as well as slower deposit growth are the key headwinds according to Morgan Stanley. HSBC also says that Q2 slippages were a little higher than what they were estimating. Given the fact that numbers are fairly strong and earnings are out of the way, banks, of course, as we know, have underperformed, this year. But IndusInd, I think, over the last 6 months has given good returns. For the medium term, how would you approach this stock? We also have a couple of queries coming in on this stock. This one is coming in from Pooja Mehta.
Okay. Yeah, absolutely. Technically, the stock is quite in a good uptrend. After a breakout about 2050, the stock has witnessed a breakout from a very multi-year resistance level, and from a price pattern perspective, that is VCV pattern, what we call in the technical terms. So looking at the overall chart on the weekly chart and the monthly chart, we believe any dip towards 1365, 1350 can be a good buying opportunity. And from a medium term perspective, we are eyeing for a target of 1580 to 1600 levels. And apart from that, if you look at the chart on the monthly chart, the stock is way below its all-time high. So there is a further room on the higher side So definitely any dip towards like 1350, 1380 can be a very good opportunity to go long, create fresh long positions for upside target of 1580 to 1640 levels in the coming months.
All right, that's the view on IndusInd. But let's also talk about a Bajaj Auto now. Numbers were strong, 20% profit growth on a YY basis. And this morning, again, we have some of the brokerages fairly positive on this stock. Morgan Stanley's overweight, target price at 5,449. Macquarie is neutral, target price at 5,383, and it believes that export volumes should continue to witness gradual recovery. Of course, exports were a pain point, for some of these two-wheeler majors, including Bajaj Auto. But on the charts now, how is Bajaj Auto looking vis-a-vis perhaps a Hero Moto?
Comparing to the Hero Moto, first of all, Bajaj Auto qualifies as the buying leader. So comparing to from the relative perspective, Bajaj Auto tops out and compared to the Hero Moto top. And technically also the chart is in line with the fundamentals. So if you look at the daily chart, the stock has been beautifully making higher rise and higher low formation, and currently also is trading in the same formation. Also from a price pattern perspective, the stock has been forming a base on base pattern, which is a quite positive development of the chart, what we can say. So one can also make an attempt to go along at the current market price, that is 5130, for upside target of 5350 to 5420 in the coming weeks. And on the downside, provided till the stock is holding about 4900 levels, we can definitely look at the target price of 5380 to 5450 levels. So on the recommendation front, go long at the current market price, maintain a stop below 4900, and for the upside target of 5400 to 5450.
All right, 5400 to 5450 would be the upside target on Bajaj Auto. But let's also talk about a Paytm. This stock, of course, is the stock of the day for me, given the fact that we have a very bullish report coming in from Jefferies on Paytm. It has initiated coverage on the stock with a buy rating, target price of 1300 rupees per share. In fact, Jefferies believes that the company is poised to enter the big league of large profitable fintechs in the next 4 quarters. Valuations are fairly attractive according to Jefferies, and it believes that perhaps there could be some risks emerging, in terms of asset quality, the PE stake sale that we keep witnessing, as well as some regulatory issues, in terms of Paytm's payment bank as well. But looking at the stock, it is close to its 52-week highs. Stock is off its lows. It has done well this year. In fact, on a YTD basis, it's up 78%. Would you expect the stock to hit the 4-digit mark sometime soon?
Yes, it is a high probability of hitting 4-digit marks. So technically, as the stock gave a breakout from 850, the stock came in the limelight of the technical peoples. So basically, on the technical chart, the stock has given a breakout from the double bottom pattern, which is a quite a strong reversal pattern on the technical front. So provided till the stock is holding above 850 mark, the medium term outlook on the charts remain positive. So as of now, the stock has been trading near the resistance level, that is, you can say 950 to 970 odd levels. So it is prudent to wait for a dip towards 910, 950 levels, which is where a very strong support is cited on the chart. So wait for a dip towards 910, 915, and for an upside target, we can expect towards 1050 to 1075. And at the same time, maintain a stop below 900 for a short-term trade.
All right, that's the view on Paytm. But let's talk about, take up some queries that are trickling in this morning. The first one is coming in from Vignesh, and he wants to know your thoughts on Happiest Minds. Of course, earnings were disappointing, and we saw the stock slip 2.5% yesterday. Now, Vignesh owns 200 shares at 1,045. He wants to know whether he should average out at current levels, or should he wait for more dips to accumulate. He doesn't want to really sell it right now. Stock is somewhere around 838. He's, of course, making losses. How would you, or what would you advise him to do?
Yeah, so from the mid-cap IT space, this is one of the stock which has not rallied compared to other peers, so which is not a very good sign. Also, on the relative front, the stock has not been doing well. So it's better to at least not wait for like a stock continue to decline and maintain a stop loss below 800. Once the stock goes below, I would advise to exit the position in loss, because after 800, the stock has a further lower side headroom towards 730, 740 odd levels. So it is prudent to keep a strict stop loss as 800 on the closing basis. So once the stock takes out 800, it's better to take a loss and move to the other counter.
Right, that's the view on mid-cap IT. But what about a Wipro? Numbers weren't, all that enthusing. We saw the company also announce that it will be merging 5 subsidiaries into itself. So how does the road ahead look like for Wipro when it comes to, the charts?
Yeah. So currently Wipro has been trading, you can say, as a very make or break level. The 400 is a very important level for the Wipro. So why 400? So if you look at the daily chart, the stock has witnessed a breakout from an inverse head and shoulder pattern, where the neckline comes around 400. So if this pattern has to work out, so we believe if this pattern work out, the 400 is a very crucial level. If that is not taken out, we can see the stock inching higher towards 450, 440 odd levels in the short term, provided 400 is protected. So any long positions maintain a strict stop below 400 on the closing basis for an upside target of 450 to 445 levels in the short term.
All right, those are the levels to watch out for on Wipro. But let's take up a few queries from the defense and shipping arena. We have Funny PG who wants to know your thoughts on GE Shipping as to whether it warrants a fresh buy at the current juncture. And we have a query coming in from Trilok as well, and he wants to know your thoughts on Cochin Shipyard. He wants to know the long-term and short-term targets on Cochin.
Okay, so first moving to the GE shipping chart, definitely the stock has been quite doing well from past couple of months, beautifully forming a higher high, higher low, and maintaining its short-term moving average. So yeah, one can create the fresh position around this level also, that is 865 to 860 odd levels, maintaining the stop below 840, and for an upside target of 925. The next stock, which I would Cochin Shipyard, right? Cochin Shipyard, it's better to avoid at this point of time because as we have seen a very sharp up move, vertical up move from 650 to all the way towards 1250 odd levels. So basically, risk reward is what we are eyeing is not favorable at the current juncture. So one should wait for a dip towards 950 to 920 odd levels, which is where on the technical front we are seeing a very good support cited on the chart. So at this point of time, it's better to avoid because after a very sharp up move, now the stock has been consolidating in a very narrow range. So either wait for a breakout from this consolidation or wait for a dip towards 920, 900 levels for a very good, you can say, where on the chart a very good support has been cited.
All right, that's the view. I hope that answers your queries. Let's take up a query on Confidence Petro. This one is coming in from Satya CK. Any thoughts on this stock? The stock hasn't done much in the last 1 month, but over the last 6 months, it has jumped somewhere around 47% or thereabouts.
Yes, on the technical front, also the stock has given a very good breakout from a symmetrical price pattern, which is a continuation pattern if you look at from the technical perspective. So definitely at the current market price, that is 87, one can create a fresh long position at current market price. Maintaining a stop loss below 80, and the target can be in the 3-digit, that is 100 and 115 levels in the coming weeks to time frame. Apart from on the daily chart, if you look at the weekly chart, the stock has beautifully formed a VCB pattern, which is a very rare pattern and has a high probability of going right. So from that perspective, also we can see that we can see a buying momentum emerging in this stock and sticking higher towards 100, 105 levels in the coming short-term time frame as well. So yes, it's definitely a buy candidate from a medium to long term perspective.
All right, I think this kind of sums up our query segment for today. But before I talk to or come to you on your recommendations, I want to get in your thoughts on the FMCG basket because this pocket will be in focus today. You have 3 big numbers coming in: HUL, ITC, and Nestle. While Nestle will be reporting during market hours, I think HUL and ITC will likely be post market hours. So HUL profits could decline on the back of price cuts and high inflation. You have ITC profits likely to rise on the back of robust cigarette, FMCG and hotels business. Nestle, I think it is expected to be the strongest out of the lot, and strong pricing and easing raw material costs are the factors that will boost the profitability. But before earnings, how should one position themselves in the likes of HUL and ITC?
So from the 2-pack, that is HUL and ITC, we prefer ITC compared to HUL, looking from a relative perspective. The point over here is that the ITC, if you look at the weekly chart, the stock has been beautifully holding 20 days weekly exponential moving average, and from comparing to the HUL is trading below its key moving average. So from a medium term perspective and from a technical perspective, I believe ITC can perform well compared to HUL. So if the results are good and if we see a breakout above 455 to 460 level, it will qualify a buying opportunity. And from a technical perspective, it will also give a breakout from a double bottom price pattern. So above 860, we are eyeing for a target of 475 to 480. And HUL, I doubt it can give a substantial up move because still it has been struggling in a defined range. So it's better to focus on Nestle and ITC compared to HUL.
All right, that's the view. ITC looking the most favorable, between ITC and HUL. But with that, Rohan, any stock recommendations that you're flagging off for viewers this morning?
Yes, we have 2 buy calls and 1 sell call. So on the buy side, Tata Motors is the one stock which one must focus on. So on the technical front, the stock has given a breakout from a continuation price pattern. And also, if we look at the yesterday's price action, it has clearly shown a relative strength and it closed near day's high, that is 2% higher, despite we are seeing that market correction. So yes, one can look to go along at the CMP in the Tata Motors for an upside target of 700 to 720 with a stop loss below 660. The next stock which qualifies in the list is HDFC Life. On the weekly chart, the stock has given quite a strong breakout, which was acting as a resistance in the past. That is 650 levels what was the level we are eyeing, that if we take out, then we can see the stock has been heading higher towards 700, 720 odd levels. So this is the next stock one can keep on radar. Buy the stock at CMP for an upside target of 700 to 720 with a stop below 630. So the next stock on the sell side is Asian Paint. As we are seeing that crude has been inching higher, and of course the paint stock has been relatively underperforming, and that is reflecting on the chart as well. So if you look at the chart of the Asian Paint, recently the stock has given a fresh breakdown from the consolidation range and a 50% retracement level of its prior up move. So from that perspective, we believe that bearish tone in the Asian Paint to continue. So one can take a position in option front if we are not comfortable in futures. So buy 3100 put at CMP, that is quoting around 38 to 40 levels for an upside target of 80, 85 and maintain a strict stop below 19.
All right, those were the recommendations coming in from Rohan this morning. With that, Rohan, I'm afraid we are running out of time. I want to thank you for taking out time and joining in this morning, and of course addressing all our viewer queries as well.
Thank you so much.
Well, with that, we've come to the end of this edition of Morning Trade. Of course, we're completely timed out, so it's a goodbye from me. And, thank you for watching from me and the entire team. But don't go anywhere, because coming up next is Opening Bell.